Good morning. Welcome to Stock Market Today and happy Friday, January 24th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today, where you can get a free email. Follow along with a lot of the content in this show, as well as give you daily stock ideas to consider in your inbox every trading day before the market opens. So U.S. equities finished mostly higher on Thursday. Industrials, REITs, and technology outperformed at the sector level, while healthcare, comm services, and energy lagged. The outbreak of the coronavirus in China continues to receive investor attention. Treasuries were stronger with the curve flattening. The dollar was weaker versus the yen, stronger against the euro. Gold was up 60 basis points, and WTI crude continued to trade lower, down another 2% on the day yesterday. And as we get to the desk this morning, S&P futures are up about 20 basis points in early Friday trading. Asian markets were mostly higher overnight, though I will point out that China, South Korea, and Taiwan were closed for the start of Lunar New Year. European markets are trading higher this morning. Treasuries are mostly flat. Dollar is stronger against the yen and the euro. Gold down 30 basis points, and WTI crude is off another 0.5%. So taking a look at the structure of the S&P 500, we had a rebound from early selling yesterday, right? So with the coronavirus news continuing to come out, we had an early sell-off in the market yesterday before quickly reversing course and closing near the highs of the day. So we still have near-term support, 3,200 to 3,250 for the S&P 500, and we're starting to maybe carve out resistance levels. We're starting to look out for some resistance levels to form as we've seen some choppy trading here of late. As I do say, though, the market is, or futures rather, are trading higher this morning. The RSI remains in bullish ranges. It also remains overbought. To me, that's a sign of the underlying strength and momentum in the trend. And at the same time, Chaikin money flow is bullish. So I know it's easy to get caught up in the day-to-day, the headlines. I like to take a step back and look at the bigger picture trend. And what I see here is an uptrend. I see a market holding above key support levels. I see a slight consolidation over the past couple of days. But as of now, not seeing a lot that gets me to alter my bullish view on the market. As always, I think it makes sense to look under the surface and see what's leading and what's lagging and where rotation is taking place for identifying ideas. But that continues to be our process, and that's actually our ongoing process. So we continue to stay the course with a bullish view on the market here in the U.S. Let's talk about our market in a minute. We already touched on the first point of what we're talking about in our note today to Chaikin Analytics clients. We shake off early losses to close near the highs of the day. Semis are trading near relative highs, and Intel could provide a further lift today. Intel reported earnings last night. Stock was trading higher by about 5%. In pre-market trading the last time I looked. Growth continues to advance relative to value. Medical devices are showing signs of relative strength of late. I think that's interesting as it's part of one of the leading sectors of the market, healthcare. Futures, as I said, do point to a higher open here today. Looking at the major indices from a power bar perspective, the Dow's power bar goes back to even 7-7 as that average lost 8 basis points yesterday. S&P 500 up 14 basis points, 144 to 56 bulls to bears. NASDAQ continues to trade well, 34 to 4 bulls to bears after adding 31 basis points yesterday. Small caps, call them flat, call them a slight underperformer, 633 to 223 bulls to bears there. Bonds moved higher, sending yields lower, and the industrials were a strong sector yesterday. Up over 1% on the day, 11 bulls to 7 bears in the industrials sector. I think the industrial sector, from a relative standpoint, has had a hard time gaining traction because of Boeing, which is why I think it's important to kind of look further under the surface. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain bullish. Major markets are mixed. Our stock of the day today comes to us from the financial sector, which has been under some relative pressure of late. Signature Bank, one of the banks, 146.28 was the close yesterday, up 19 basis points. SBNY has a very bullish Chaikin Power Gauge rating due to very strong price volume activity, very positive export activity, as well as strong earnings performance. Stock does have some weak financial metrics, but the 20 factors, the 5 in each of these 4 categories, give us our very bullish rating for a stock that's in a strong trend, above a rising long-term trend line, and in a strong industry group. The banks, from a power bar perspective, do remain strong. So what I see here is a consolidation An earnings related event that breaks us out of this consolidation. We have a very bullish stock that's outperforming the market with intensely bullish money flow. Currently overbought after that strong post earnings rally. You can see the green EPS here says there was a positive earnings surprise. You can also see it here as well. What I want to see here is a consolidation above this 140 breakout level that works off this overbought condition and then sets up a more compelling entry point if you're following along with our process. If you like to trade breakouts, well, you have one here. You have a breakout. The breakout through the 140 level induced by the earnings report sets up the breakout, which in if that's how you trade, that breakout is still in place, and you kind of have an area at around 140 against which you can manage your risk. I think this is compelling if you're a breakout trader. I think this is a name you want to watch if you're following along with the process that we mostly advocate, which is oversold with bullish money flow on a bullish or very bullish stock that is leading the market. A couple different ways to slice Signature Bank, but it does look compelling to me as a bullish idea. Taking a look at the sector tracker now, the movement of the major sectors over the last 5 days. Rates have come in. Utilities continue to outperform. At the top of the list here now for a few days in a row. Tech still at the top of the list. Real estate moves into the number 3 slot again. It seems to me that the market's working higher in a replay of what we saw for the majority of 2019, which was tech and growth outperforming along with the defensive bond proxies or the defensives and the bond proxies. And you can see it here in the near term by what's outperforming: Utes, tech, REITs, staples, and comms, all kind of playing into that theme. Discretionary, healthcare, and fins are middle of the road. Industrials, despite the strong day yesterday, continue to lag. And energy, there's no other way to slice it. Energy continues to be a disaster, and there's no reason to go bottom fishing in that sector of the market, at least as we see it based on our work and based on relative strength work. Our industry in focus today: software and services. It's actually lagged over the past 6 months, but it has future potential with a very strong power bar ratio: 56 to 12 bulls to bears, currently ranked number 10 of the 21 subsectors we track. It's moved down 3 slots over the past week. Some of the names that you may want to consider doing work on there: Avaya Holdings, AVYA, Perspecta, PRSP, and TiVo, TIVO, all with very bullish Chaikin power gauge ratings. And for me, I think it's kind of interesting because we're starting to see the emergence of outperformance by software. XSW has a bullish ETF power gauge rating and is in the strong trend, right? For the last quarter or last 4 months of 2019, it was roughly an underperformer, but now we're starting to see improvements in relative strength, rounding out of an oversold condition, intensely bullish money flow for the fund, right? Now, for purely from a technical perspective, we made a high, pulled back, tested that high, pulled back, and now we have a breakout. Call the low 90, call the high about 102 half. That's 12 and a half points. Add 12 and a half points to the 102 and a half breakout level, and you can, kind of start to think about 115 as potential upside potential for the XSW, which is now outperforming a lot of the software names. 56 of them, bullish or very bullish. You can do some work, drill down on what you think are the best stocks within this group. But I think this is an interesting area of the market to go hunting for long ideas, right? Do some work on software. Check out the stocks that are trading well within that industry group. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers. Citrix, actually part of that software group, right? Up 7.76% following their earnings announcement and the company announcing an increase in their buyback. Netflix saw a nice rebound. There was also some positive sell-side commentary on Netflix as it relates to them potentially benefiting as the outbreak of the coronavirus in China coincides with the start of the Lunar New Year. AAL, American Airlines, up 5.4% following their earnings announcement. MTB is a very bullish stock that added 5.23% yesterday. Call it 5.25. I'm getting a little too fine there. Following their earnings announcement, and L Brands caught an upgrade from Barclays, which sent that stock higher by 5.1% yesterday. On the loser side of the board, VF Corp. VF Corp, a very bearish stock, and it trades down nearly 10% following their earnings announcement. Ray J, Raymond James Financial, a very bullish stock. They had an earnings miss yesterday. Stock lower by 6.2% on the day. Travelers, TRV, with its bearish rating, down 5% following their earnings announcement. Media stocks were weak yesterday on the back of the Comcast earnings, sent Disco lower. Discovery down nearly 5% on the day. And Edwards, some negative sell side comments on EW, sent that stock lower by 4.82% yesterday. But I do think the med device space is starting to look interesting. We're going to take a look at a chart and what I'm looking at a little bit later on in the show. But first, let's talk about some of the key themes and relationships. That's what I look at on Fridays. And one of the ones that's really caught our attention of late is the reemergence of growth relative to value. Taking a look at the S&P 500 Growth ETF, VOOG, relative to the Value ETF, VOOV, right? Growth, big time outperformer, topped out, now working higher, right? That we had that growth to value shift towards the tail end of last year, and now we are working higher. Here's this ratio. It's above the 200-day moving average, now working through the bottom of a resistance zone in a move that's confirmed by momentum. The RSI of the ratio now overbought and remaining overbought. So what does that tell us? That tells us that there's some solid upside momentum in the growth over value theme, right? So one way to play it is to drill down on VOOG and look for some of the bullish and very bullish stocks that are holdings within that fund that are become oversold with bullish money flow. That's one way to generate ideas. Another way to generate ideas is to just look at the Qs, right? Qs very much a growth oriented fund. All right. And here's Qs relative to SPY, right? After a long consolidation, we had a breakout at the tail end of last year, and it continues to work higher. So you can drill down on the holdings of QQQ. Now, what I will say is it's a lot of the mega cap stocks that are driving the trading there. Think about your names like Facebook, Amazon, Google, right? Netflix was strong yesterday. What I've been calling the Fan Mag, which I am not taking credit for that acronym, but Fan Mag, Facebook, Amazon, Netflix, Microsoft, Apple, and Google, driving a lot of that shift in the growth and value dynamics. So worth drilling down further if you're looking for individual ideas. Now, semis, are they resolving to the upside against the S&P 500? Right, here's SMH relative to the SPY, right? Nice, solid move higher. Good trend for over a year now. Near term, we went into a consolidation that has held above support. Now, yesterday we closed at the top end of that consolidation zone, but as I said earlier, Intel trading up 5% this morning in the pre-market following their earnings announcement could give a boost and break us out of this short-term consolidation, right? On the pullback, RSI pretty much stayed above 50. That's the RSI for the ratio. And on an absolute basis, SMH in a nice steady uptrend. If I want to drill down on the fund to get a sense for if this outperformance is likely to continue, well, how am I going to do that? I'm going to take a look at the Chaikin Power Gauge ETF rating for SMH and see that it's bullish. Drill down on the holdings, 11 bullish or very bullish stocks, 0 bearish or very bearish stocks. So this has kept us bullish on semis. And what does that mean for our view on the market? Well, if semis continue to outperform, that's a really important data point in our view for the likely path of the overall market. So let's watch semis today on the heels of that Intel earnings announcement. I think this trend is likely going to continue, which bodes well for the market in general. Finally, I said we'd talk about medical devices as new leadership. I'm asking the question because it's emerging, but I think there's some positive signs here. Taking a look at IHI, the Med Devices ETF, nice steady uptrend above the 200-day moving average. Confirmed by momentum. Look at this. Never became oversold on these pullbacks and now has fully shifted into bullish area. Now, are we overbought here in the near term? Yes, we are. But this is a steady trend confirmed by momentum. Bullish ETF rating 13-4 on the bulls to bears. And check it out relative to the SPY, right? Breaking this uptrend line. If you're looking at it from a classical charting standpoint, we have a triangle pattern that has broken to the upside. Now being retested, I think odds favor it continuing to move higher. So take a look. There's 13 names that are holdings of IHI with bullish or very bullish ratings. And if you want to drill down on them, as I've said, we're offering a 14-day trial to Chaikin Analytics. Head over to chaikinanalytics.com/test drive, where you can drill down on areas like SMH and IHI and see which of those stocks are bullish and very bullish and oversold here in the near term that might be compelling opportunities. I hope that you all have a great weekend. I will not be here Monday through Wednesday of next week as I will be down at a conference. I'll be back next Thursday. Have a great weekend, everyone.